Welcome back to the Wall Street Podcast. We're diving into the Wall Street Journal from September 11th, 2025 today. Our goal is to quickly pull out the key market moves, corporate strategies, and policy shifts that are shaping things right now.
It's definitely a dynamic picture. Every development has ripples for capital and labor.
Okay, let's start with the market snapshot. S&P 500, NASDAQ, both hitting record highs. Strong signal there. But the Dow Industrials slipped about 0.5%. Mostly Apple, it seems.
Right. And Klarna, the payments company, had its IPO.
Yeah, debut on the NYSE. How'd it do?
Closed up 15%. Pretty solid start.
Okay. And broader economic signals, inflation.
Well, August wholesale prices actually dipped slightly, 0.1%, which was unexpected after July's jump.
So some cooling, perhaps?
Maybe temporarily. But overall, prices are still up 2.6% over the year. And businesses, well, they're bracing for a big hit on health insurance.
So big.
Projected 9.5% surge in costs for 2026. That's the largest increase in 15 years.
Wow. What's driving that?
Mainly higher hospital care prices and some very expensive new drugs coming through. It's a real operational cost challenge.
Shifting to corporate plays. OpenAI and Oracle. That deal is huge.
Just staggering. $300 billion over 5 years. Just for computing power.
Oracle's stock jumped 36% immediately, added, over $100 billion to Larry Ellison's wealth?
Exactly. And Oracle now sees its cloud revenue hitting $114 billion by 2029, up from just over $10 billion now.
So what does this massive commitment signal for the AI industry structure?
It really underscores the incredible capital needed for cutting-edge AI. It cements Oracle as a critical infrastructure provider.
It's just more concentration among the tech giants.
I think so. It shows the immense financial leverage involved. For investors, it's a clear signpost about the scale of investment at the AI frontier.
Also on the corporate front, Novo Nordisk is cutting jobs.
Yeah, 9,000 positions, about 11% of their staff. They're aiming for $1.25 billion in annual savings by late 2026.
Is this just cost-cutting or more strategic?
It seems strategic. Redirecting resources. They want to focus on growth in diabetes and obesity drugs where competition is heating up.
And Apple. New iPhones.
Right. The iPhone Air. Thinner, $999, but, trade-offs on battery and camera.
But the standard iPhone 17 got some nice upgrades.
It did. 120 hertz display that means smoother scrolling and doubled storage. Still starts at $799. They're clearly relying on that loyal base to upgrade.
Okay, let's turn to policy. There's drama around the Federal Reserve.
A federal judge blocked President Trump's attempt to remove Fed Governor Lisa Cook, at least temporarily.
So she can vote at the next interest rate meeting.
Yes. It really highlights the ongoing tension over the Fed's independence.
And how does this constant challenge to the Fed's independence impact things?
Well, this kind of legal and political maneuvering, it erodes the Fed's traditional insulation. That uncertainty can definitely inject volatility into markets.
Raises concerns that policy might be driven by politics.
Exactly. Short-term politics over long-term economic stability. That potentially hits investor confidence, maybe even the dollar standing globally.
Also on the Fed front, nominations moving.
Yes, the Senate Banking Committee advanced Stephen Miron's nomination for the Fed board. And Christopher Waller is being mentioned as a sort of dark horse for Fed chair. He has Wall Street credibility.
And then there's the Supreme Court. Tariffs.
Right. The court will review President Trump's appeal on his use of tariff authority.
This could be big, right? Potentially expanding presidential power.
It could significantly broaden fiscal authority, yeah. Maybe allowing other kinds of taxes under, national emergency justifications. Very uncertain outcome for trade and prices.
Switching gears slightly, AI's impact on operations. This AI-driven assembly line idea.
It's about AI bots orchestrating routine tasks. Think HR onboarding done in under an hour with minimal human input, or accounts payable processed almost instantly with near zero errors.
Freeing up humans for
judgment calls, negotiation, the more complex stuff.
We also saw copper demand surging. What's behind that?
It's a combination. The green energy transition needs a lot of copper. AI data centers are incredibly demanding, projected 4.3 million tons over a decade. And increased military spending globally plays a part too.
Okay, let's talk about the operational cost challenges businesses face, beyond just tech.
Well, as we mentioned, that big jump in health insurance costs is a major one. Also, fluctuating construction material costs are hitting bottom lines.
How are companies adapting?
They're reevaluating benefit plans, maybe shifting more costs to employees, unfortunately. And they're aggressively looking for, better deals with insurers or pharmacy benefit managers, trying to mitigate those rising expenses.
So wrapping this up, what does all this mean for the general public, for you listening?
Okay, on healthcare. You might see higher deductions from your paycheck for insurance, maybe higher out-of-pocket maximums. It hits the wallet directly.
And in the workplace.
AI handling more routine stuff could mean faster service in some areas. And it could shift human roles towards more complex, maybe more interesting, judgment-based work.
And consumer prices. That tariff case.
Yeah, the Supreme Court's decision could lead to sudden, unpredictable changes in import taxes that might affect the price you pay for all sorts of goods.
So, final thought to leave folks with.
As we watch AI remake industries and political forces test our economic institutions, what are the long-term shifts in power and opportunity we should really be thinking about? How might this fundamentally change things for both capital and labor down the road?